So guys, this is IFOS. Sorry, just wanted to just recap. IFOS, we're looking at gift taxation. In gift taxation, we're looking at benefit taxation. That means a jewelry of 10 lakh you got for 2 lakh, a house worth 1 crore you got for 80 lakhs. Now here, the individual benefit for house property I'm talking about, if the individual benefit is greater than either A or B, whichever is higher. What is A? A still remains 50,000 only, yes, and B is 10% of the sale consideration. So if your sale consideration is 80 lakh, 10% of that is 8 lakh, 10% of sale consideration. So 8 lakh or 50,000, whichever is more. Guys, how do you remember in the exam? It is 10% of sale consideration or stamp duty value. Let me tell you, stamp duty value is not given by you or me, so we can't touch it. Sale consideration is given by you or me, so we can touch it. Yes, so 10% of sale consideration. So 8 lakh or 50,000, whichever is more, 8 lakh is more, and hence in this case, the benefit should not be more than 8 lakhs. Is the benefit more than 8 lakh? Yes, the benefit is 20 lakhs. So will it be taxable? Yes, the entire 20 lakhs will be taxable. Guys, the exam will not tell you this is gift taxation, etc. They will have just some Mr. R who's getting a house of 1 crore for 80 lakh, and you have to think about it as benefit taxation, and you have to solve it like this. Guys, this is the concept of benefit taxation. Some more points here, guys. This is complicated, so keep your mind open. This is complicated. Guys, the stamp duty value has changed. Can it change? Yes, it can. The stamp duty value right now is 1 crore rupees. And you've decided to buy 80 for 80 lakh. 50,000 or stamp duty value? No, 50,000 or 10% of sale consideration, whichever is higher. That is the maximum individual benefit you can take. In our example, the benefit was 20 lakhs, so much more than this, so the entire 20 lakhs is taxable. Alright. SDV no use? SDV use no, because 20 lakh, how did you get 20 lakh? 1 crore minus 80 lakh is 20 lakh, so SDV is useful. Alright, guys, looking here, the stamp duty value today, guys, on the 14th of August is 1 crore, and you've decided to purchase it for 80 lakh, and this is the date of your agreement, this is the date of your registration. But guys, a few months back on the 14th of Jan, you had entered into an agreement, so that is the date of agreement, when the stamp duty value was just 85 lakhs, and that time also your sale consideration obviously will be 80 lakhs only. So now there are two stamp duty values. Which one would you want to take? Let's see, guys, which is more beneficial. Here the benefit is 20 lakh. 10% of your sale consideration is 8 lakh. So up to 8 lakh you will not be taxed, but you are getting a benefit of 20 lakh. So will you be taxed? Yes. So if you take 1 crore as the stamp duty value, you will be taxed. I repeat, guys, please watch very carefully. Please tell me one by one, step by step, guys, what is the benefit here? The benefit here is 20 lakhs. Only a fool will give you such a high benefit, guys. This is you are paying cash. If I don't get the answers, guys, I will have to take it at a different pace and I will finish it off without, guys, any responses. I will not be able to deal with this very well. So I'm going to ask you again, guys, on the date of registration, the stamp duty value was 1 crore. You decided to pay 80 lakh. What is the benefit that you're getting? 20 lakh. According to the section, step number 3, 50,000 rupees or 10% of sale consideration, 8 lakh, whichever is higher will be allowed. So which is higher? 8 lakh benefit is allowed to you. How much is your benefit? 20 lakh. So sorry, you have got a lot of benefit. This 20 lakh will be taxed in your hands. But can I use this stamp duty value? Because according to this stamp duty value, my benefit is only 5 lakhs. And here also it is 50,000 or 10% of sale consideration, which is 8 lakh, which is more, 8 lakh is more, and my benefit is within that, so I will not be taxed here. So guys, obviously someone will say I want to use this stamp duty value. But how does the government know that you're not fooling them? that this date of agreement you actually entered in this date of agreement. So the government says, listen, do you have two stamp duty values? Yes, date of agreement and date of registration. Then if you want to take the lower stamp duty value, we'll allow you, but you have to prove that you have paid some amount of money on or before this date. So on or before 14 January, have you paid? And how will you prove, guys, that payment should have been made other than cash? So no cash allowed. Of course, no bearer check allowed, and no cross check and DD allowed. So guys, other than cash, other than bearer check, and other than cross check and DD, this should not be the case. Other than that, can you do Paytm, GPay, anything? Yes, you should have proved that you have paid at least some amount of money on or before this date. So quickly recapping, guys, this is gift taxation. We are looking at immovable property. Only in immovable property we have these complications. Yes, exam will give you immovable property only, I promise you. Stamp duty value will you take? Yes. Sale consideration will you take? Benefit you will calculate? Yes. In a simple question, there will be only one stamp duty value. But guys, when there are two or more stamp duty values, you will take the two: date of agreement, date of registration. Whichever is lower you can take if you prove, or if you paid some money other than cash, other than bearer check or demand draft, other than cross check or demand draft. Guys, bearer check and cross check are different than from account pay check. Please tell me this is a check for 1 lakh rupees. I have written nothing. Can I say this is a bearer check? Yes, not allowed. What if I just cross it like this? This becomes a cross check, not allowed. Then which check is allowed? Guys, if you write account pay, only that check is allowed. I am not going to go into details of banks and checks. I am hoping you know that already, but only account pay check is allowed. So cash not allowed, bearer check not allowed, cross check not allowed, but account pay check, yes, that is allowed. Paytm allowed, GPay allowed, yes, all those allowed. NEFT, RTGS, all of that allowed. I hope that is clear now, guys. So this is stamp duty value, and please tell me 10% of what? 10% of sale consideration. Guys, there's a recent amendment, so check that amendment now. This is a builder. During COVID, he was not easily being able to sell the house, and this is you are receiving the house. The stamp duty value of this house is, let's say, 90 lakhs, and you have purchased it for 80 lakhs. So please tell me the benefit in the chat box, guys. The benefit is 10 lakhs. Please tell me, are you getting a benefit? Yes. So let's check. Step 1, is it MISB SAT job? Yes. Step 2, is it one of those situations? No. So step number 3, is it money? No. Is it movable property? No. Is it immovable property? Yes. So the benefit can be A, 50,000, or B, 10% of sale consideration. Guys, this was the case till COVID. Guys, so will it be taxable? Yes, 10% of sale consideration is 8 lakhs. So 50,000 or 8 lakh, whichever is higher, 8 lakh, but your benefit is 10 lakh, you are going to be taxed. So guys, will this person buy this house and pay this tax? No, he doesn't want to do that. So they went to the government. The builder and the buyer went to the government and said, listen sir, COVID. In COVID, please tell us what to do. How do we sell the houses if you're going to do this way and you're going to tax our people? So the government says, what do you want? So you told the government that, listen, make this 10%, 20%. Now please tell me, guys, if I make this 20%, then what is the benefit of sale consideration? 20%, 16 lakh. So 50 and 16, which is higher? 16 lakhs. So now will I be paying any tax? No, you'll not be paying any tax. So the government says, okay, I'll give you 20%, but only for some cases. What is the case, guys? This is an amendment. So this 20% of sale consideration is only when this house is a residential house. Guys, everyone understands what's a residential house? Yes. Next, this house is the first time being sold. So first time sale, that means, guys, is the builder selling it? Yes. What if I bought it from the builder and I am selling it? Then this will not apply. This has to be the first time sale. The sale consideration should be up to 2 crores. Guys, is this a residential house? First time sale. Sale consideration should be up to 2 crores, not stamp duty value. Sale consideration. And the last, this should happen between 12th November 2020 to 30th June 21. How do I remember this date, guys? So it's very random. So 12th November, I think of some big politician like Sonia Gandhi's birthday, etc. So we started it on that day. And 30th June 21 basically is part of your year. That's the reason this amendment is important for your year. So please tell me, guys, does this 10% become 20%? Yes. Is that beneficial to buyer and seller? Yes, it's beneficial. So hence, what are the conditions when it becomes 20%, guys? First, it should be a residential house. Second, should it be a first time sale? Yes, you know what is a first time sale. Third, guys, the sale consideration should be up to how much amount, guys? Sale consideration should be up to 2 crores. And last, it should be within which dates, guys? Anyone remembers the dates? 12th November 2020 to 30th June 21. Isn't this really old? Why are we doing this now? We are doing this now because, guys, this date has April, May, June of your year, guys, 21-22. Is this important? Super important. Is there chances of this coming in the exam? Absolutely yes. How will I identify it? Guys, they will give you this first time sale. They will use these words. So you'll get an idea about this. And this anyways is 20% now instead of 10%. But for other houses, let's say I'm buying a house worth 12 crore rupees, then in that case, it will again be 10%. So this 20% is only for some cases. Perfect. All right. So this is 10% going to 20%. Please watch the recording for any further explanations. Again, if you want, guys, please understand this is a fast track course. We have to go slightly fast. All right. So we'll do sums on this, don't worry, in the module, and when we do the material sums, you'll understand. All right. This is gift taxation, guys. Anything else in this? Let me check. Yes, guys, stock is not gift tax. Example, guys, this was a seller of house, or this was a giver or seller of jewelry. Let's take jewelry, and I am buying this jewelry. The sale price of this jewelry, guys, or the cost of this jewelry is 10 lakhs and I am getting it for 2 lakhs, guys. Is there a benefit? Yes. 8 lakhs. Will it be taxed under gift taxation IFOS? Yes. But please remember, what if I am not a normal person? What if I am a jeweler? And what if for me this is stock? Then in that case, you will not be taxed under IFOS. This calculation will not happen. You will be taxed under PGBP. Whenever you sell this jewelry which you bought for 2 lakh, if you sell it for 12 lakh, that 10 lakh will be under PGBP. So this MISB SATJA also includes stock. Stock will not be considered here. All right. Anything else? That's about it, guys. So we've done with gift taxation, guys. Let me tell you the section. The section for IFOS is 56, 2 and 10. How do you remember this, guys? This is how you remember. You should always expect 10 gifts. So is this a section for gift taxation? In the exam, will they use the word gift? Maybe. So this is gift taxation, or they might say gifts received for no consideration, or property received without consideration. And what is the second one which we discussed? Second one is called benefit taxation. Will they use the word benefit taxation? No, they will use property received for inadequate consideration. Inadequate means it's for 1 crore but you're getting it for 80 lakhs. So that is what they will use. But this is 56 to 10. All right. Now, guys, moving to the second one. Guys, it's called dividend taxation. Please think and tell me, dividend, who gets dividend, guys? Only shareholders on their shares on dividend. Proprietors, partnership firms, LLPs, they don't get dividend. Only companies, shareholders get dividend. So shareholders getting dividend, is it taxable? Yes, it is taxable. In which head is it taxable, guys? It is taxable under IFOS. What if I used to use the example of Rakesh Jhunjhunwala, who just passed today. So unfortunately, but I'm still going to use his example only, guys. What if Rakesh Jhunjhunwala used to earn dividend? Where would that be taxable? Even for him, it would be taxable under IFOS, because, guys, all dividend has only one direction, that is, dividend is always taxed under IFOS. Whether it's you, whether it's me, whether it's Rakesh Jhunjhunwala, everyone's dividend is taxable under IFOS. When is it taxable? If it's final dividend, then whenever it is declared, whichever year it is declared, it will be taxed in that year. But if it is interim dividend, it will be taxable in the year you receive it. How do you remember this, guys? I'll tell you. You remember the word FD. Final will be taxed when it's declared, whichever year it's declared. And interim will be taxed in the year it's received. Do you have to remember both? No, remember only one. If this is received, this is taxable when declared. The opposite, this is taxable when it's received. Alright. Next. Guys, is it fair to tax dividend? I'll show you on the screen. This is a partnership firm which has already paid tax. It distributes the share of profit to the partners. Will the partners again be taxed? No. Why? Because the partnership firm has already paid tax. Guys, you and your parents go to a restaurant to have dinner. Your parents pay the bill. Will they ask you to pay bill again? No, because you guys are one and the same people. Same thing, guys, if the company has paid tax, then why are the shareholders earning dividend is that taxed again? Because they say a company has a separate legal entity, you are separate, they are separate, and hence they say dividend is justified. Earlier, guys, dividend used to be exempt. There was a section called section 1034. In that, dividend used to be exempt. Life was very good earlier. Dividend used to be completely exempt. But now that has been removed. So now is it taxable? Yes, dividend is now taxable. Alright. Now, guys, in India, one thing we don't like is to pay taxes. Taxes are high. We don't see the reward. Our potholes are really large. So we don't feel that we should be paying taxes. So this is a company which is trying to remove money from the company, but without calling it dividend, because, guys, if the company removes money and pays it to the shareholders and calls it dividend, will it be taxable in the hands of the shareholders? Yes. So what they are trying to do is they are trying to remove money, but they are not going to call it dividend. Let's see what this is. But first, guys, the company has accumulated profits of 222 lakhs. Why such an odd figure? You will see, because it's related to the section. So it has accumulated profits of 222 lakhs. Does it want to give it to the shareholders? Yes, it wants to give it to the shareholders. But if it calls dividend, if it says that this money is dividend, the shareholders will be taxed. So it's going to pay the money, but it's going to call it something else. Alright. So let's say how it fakes it. First, the company gives assets to the shareholders. So it tells the shareholders, here I am giving you gold coins worth, let's say, 200 lakhs. So now, guys, have the shareholders got some assets from the company? Can they sell the gold coin and make money? Yes. And has the money gone out of the company? Yes. So the company is very happy and the shareholders are very happy that they have removed the money from the company without calling it dividend. The government says, listen, your happiness is going to be very short, because we know what you're trying to do. You're trying to give this money out without calling it dividend, but we will assume it to be dividend. We will call it deemed dividend under section 222. And this deemed dividend under section 222A, will it be taxed? Yes, it will be taxable. In whose hands? In whoever's hands dividend was taxable, same dividend is also taxable. Is deemed dividend taxable? Yes, in the hands of the shareholders. So 222A is for assets. Assets distributed by a company to shareholders, will it be deemed dividend? Yes. But guys, this one has failed. This method of giving assets has failed. So they go to the second plan. What they give is, they give out bonds or debentures or preference shares to the shareholders. Guys, please tell me, if you have a bond of 100 rupees, are you going to get the money someday from the company? Yes. So if the company gives free, they give the shareholders bonus bonds or debentures or preference shares, and which are redeemable, let's say in 3 months or 6 months, will the money go out of the company? Yes. And will the shareholders get happy that they've got the money without calling it dividend? The government says, we know what you're trying to do. So under 222B, B is for bonds, debentures or preference shares given by the company to shareholders. This is also deemed dividend. So this plan also failed. Yes, this plan also failed. Now what they are trying to do is, they want to now fool the government by shutting down this company. But why will they shut down such a good company? I'll tell you, they will shut down this company. When you shut down the company, what do? You distribute the assets to the shareholders. So they will distribute the assets to the shareholders. And guys, but shutting down the company, but no problem, tomorrow they will start a new company. But have the shareholders got the assets or the money? Yes. The government says, listen, we know what you're trying to do. So under 222C, C is for closing the company. Closing basically means liquidating the company. Liquidation of company. This will also liquidating of company and giving assets to shareholders. Even this will be considered deemed dividend, and this plan also failed. Yes. So what they would do in the end, they would basically reduce or decrease the share capital. Let's say one share is for 100 rupees. They will reduce the share capital to, let's say, 5 rupees, and they will pay 95 to the shareholders. Obviously guys, because if a 100 rupee share becomes 5 rupee share, then you get money back. So 95 will be given to the shareholders. They get happy that they are getting 95 back. But the government says this is also something that we know, D, that is decrease or reduction in share capital. And even that will be deemed dividend. So guys, in all these 4 cases, did a company try to remove money from itself and give it to shareholders, either by way of assets or bonds, debentures, preference shares, or liquidation of the company and distributing assets, or reduction of share capital? Yes. And in all these cases, were they caught, and was it taxable as deemed dividend? Yes. In whose hands? In the shareholders' hands. So here guys, it's taxable. Yes, it's taxable. What is it called? Deemed dividend. Who will pay the tax? Shareholders. But it is taxable only up to accumulated profits. That means if assets are given worth 200 lakhs, will they be taxed? Yes. 222 lakhs? Yes. But if the assets worth 250 lakhs are distributed, then you will only tax up to 222 lakhs. Whether the accumulated profits are capitalized or non-capitalized doesn't matter. Whatever the accumulated profits, that will be the ceiling. Yes, that is the ceiling, guys. So is this the maximum limit of deemed dividend? Yes. Just like you have a maximum speed on your car, same way there is a maximum speed or maximum amount of deemed dividend, which is basically accumulated profits, whether capitalized or not. Just want to give you some additional information here. Guys, in 222B, if instead of bonds, debentures or preference shares, what if you give them equity shares? Then no problem, because equity shares does not involve money going out of the company in the future. So this is deemed dividend, A, B, C, D. There's one more section left, and then dividend taxation will come to an end. That we will do in just 2 minutes from now. All right. Guys, here is the company which is very frustrated because it could not remove the 222 lakhs and it could not give it to the shareholders. So it's very upset. The shareholders also upset, the company is also upset. So now they come up with a final plan. They give a loan to to this shareholder. And I'm changing the shareholder. He is now called a beneficial interest holder because this next section only applies to a beneficial interest holder. So the company is giving a loan to this beneficial interest holder of the amount of, let's say, 200 lakhs. Now please tell me, has the money gone out of the company? And has it gone to the shareholder? And are we calling it dividend? No, we are calling it a loan. The government says, very smart of you. Very smart of you to try and fool us. But we know what is this. This is also deemed dividend. And we will tax it. And since it's the most extreme step that you have taken, this is 222E, and we will tax this loan which has given to beneficial interest holder. So has this plan failed? Yes, this plan has failed. So why don't we do one thing? Let the company pay to another third entity, and I am, let's say, a beneficial interest holder. I am a substantial interest holder in this entity. That means I hold 20% or more in this entity. So indirectly the money will come to me. Yes, indirectly the money will come back to me. The government says, even if you give a loan to any entity in which the beneficial interest holder has substantial interest, then in that case also, that is also deemed dividend. I repeat, guys, please tell me who had the money. The company had the money. Who wanted the money? Shareholders wanted the money. If they gave it like dividend, will it be taxed? Yes. So they gave it in the nature of a loan. And if the nature of loan also, is it deemed dividend? Yes. But it has to be only to beneficial interest holder. What if it's given to non-beneficial interest holder, let's say 1% holder, 2% holder, then this section does not apply. Beneficial interest, as you know, guys, is basically 10% or more shareholding in the company. What if they give it to an entity in which the beneficial interest holder has substantial interest? Substantial interest basically is 20% or more. Then in that case also, this will also be deemed dividend. So even this plan failed. Yes, this plan also failed. What if finally, guys, they give a loan to a random third party? But the examiner has told us that this third party will be giving the benefit, passing all the money to beneficial interest holder. Even in that case, third party for benefit of BIH, even this will be deemed dividend. So guys, whether you go straight or you go from this side, or whether you go from this side, do you see cops at the other end? Imagine, guys, you're not wearing a helmet. If you go straight, you will see a cop. If you take another turn, you also see a cop there. If you go this turn, you again see a cop. So in all these three cases, guys, are you caught? Yes, you're caught. Same way here also, guys. Whether you give the loan directly or indirectly, you are caught in all three places. And when you're caught, how is it going to be caught? As deemed dividend under which section? 222E. And who will pay the tax on it? The beneficial interest holder will be taxable. Under which head? IFOS. Up to accumulated profit? Yes, but only which is not capitalized. So are there some changes here? Yes, between A, B, C, D. A, B, C, D was for whether capitalized or not. This is only for not capitalized. And this company, guys, can it be any company, big, small? No, it has to be a closely held company. Closely held company, in a nutshell, you don't have to remember the definition, but closely held company is basically like a private company. A private small company is called a closely held company. Perfect. So only which is not capitalized, this is a closely held company. Now let's see the difference, guys. A, B, C, D, this is E. A, B, C, D applies to all companies. Yes. E applies only to closely held companies. A, B, C, D applies to every shareholder. E applies only to beneficial interest holder. A, B, C, D applies to all accumulated profit. This applies to only that accumulated profit which is not capitalized. All right. But guys, what if I repay the loan back to the company? Will they forgive me? No, they say once you've taken the loan, whether you've repaid it back does not matter to us. Repaid does not matter. What if it's a genuine loan and I'm paying interest? It is not removal of dividend. It is a genuine loan. I'm paying interest also. Does not matter. So these things will not bother us. Even if you pay interest, even if you are repaying the loan, it does not matter to us. And so guys, is there no way to take this 222 lakhs outside? There is a way. You call it a business advance. If you take this loan for business purposes, then is that allowed? Yes. Then will it be deemed dividend? No, it will not be deemed dividend. So the only way to get out money from the company is by calling it a business advance. Alright, so this is 222E. Beneficial interest holder, we know the definition. Yes. So guys, this is deemed dividend. Is dividend taxable? Yes. Is deemed dividend also taxable? Yes. And both are taxable in the recipient's perspective. Yes. Under the head IFOS. And last situation guys, and dividend taxation comes to an end. This is an Indian company and it holds 26% or more in a foreign company. Let's say example, it holds 80% in the foreign company. This foreign company is doing really well and they have 100 crores worth of profits which are lying and they want to declare dividend. Is the foreign company going to be paying tax in that country on its profits? Yes. Now this profit of 100 crore rupees they want to declare as dividend. If they declare as dividend, how much will come into India? 80 crores will come into India because 80% is held. So 80 crores will come into India. Will it be taxable in the hands of the Indian company? Yes, because as you know, dividend is taxable now. Anyone receiving dividend, it will be taxable. So they say, why should I pay this tax? Instead, I will not declare a dividend only. Guys, is declaring dividend compulsory? No. If I don't, it's almost like I will not fail CA exams. If I don't enroll for CA only, how can I fail the exams then? So same way here, this 100 crores, if I don't declare a dividend, it will not come to India. And if it doesn't come to India, I will not be paying tax on it. This was very, very nice, but the Indian government will not like it because they were not getting tax on it. So they told the Indian company that company, please, can you bring back this dividend? Can you please bring back this dividend? So the Indian company says, what is my benefit if I bring back this dividend? They said, if you bring back this dividend, we will tax you at a flat rate of 15% only. Companies usually pay tax at 30% and 25%, but we will tax you at 15% only under a section called 115 BBT. So this is called bring back dividend, guys. This only applies to Indian companies. What if this, instead of Indian company, it was Rakesh Junjunwala here, then in that case this section will not apply. Only applies when it's an Indian company. Only applies when this is a specified foreign company, basically in which you have 26% or more shareholding. Only then in these cases this situation or this section will apply. So guys, dividend taxation done, gift taxation done. We can look at the quick book, but we have left to do the general provisions. We'll do the general provisions and then we will move ahead. The second session on a Sunday evening, I'm a little tired, so I'm just going to take 2-3 minutes here and come back and we will continue on general aspects of gift tax of IFOS. Alright, I'm back and let's continue, guys. So we are just left with the general part of IFOS and then IFOS comes to a nice royal end. So let's talk a little about that. Now guys, in your house, let's say you buy some new clothes, but your old clothes you don't want to throw away. You're one of those hoarders who likes to hoard. They never want to throw away things. So will you put them in some or the other place? Yes. There's always that one drawer where everything else goes. So same way, guys, in income also, the government has 5 heads of income: salaries, house property, business and profession, capital gain. And if any income cannot fit in any of those 4, will the government say, listen, I don't want to tax you? Do you think the Indian government is so generous? No, not at all. So they say, listen, we will tax you, but we will tax you under IFOS. So IFOS is like that drawer that you have, you put everything. It's like that dustbin where you can put everything. So that is what IFOS is. In fact, IFOS has income sections, which are section 56.1 and 56.2. That chair, yes, definitely that chair. If you stay on your own, that chair keeps building up. It's a mountain. Alright, anyways, coming back. So 56.1 and 56.2 are two sections. 56.1 says that there are some incomes which will be only taxable under IFOS, and 56.2 says that if there is any income which is not taxable anywhere but we don't want to give it up, the government says please put it here. So this is almost like that dustbin, or almost like that residual section where every income can be put. So this is section 56.1 and section 56.2. Sorry, I said the opposite. 56.1 is a dustbin section, and this one is some incomes which are always taxable under IFOS, like dividend is always taxable under IFOS. Guys, here you don't need to by heart it. Honestly, in the exam, do they check you on 56.1 and 56.2? No. You just need to understand that are those incomes. If your answer is yes, you need to just tell me if I can fit them in IFOS. I'm going to give you some incomes from the shortcut. In retirement/death, I will receive some welfare gifts from insurance contracts. Guys, do you need to by heart this? Not at all. All I'm going to tell you is I'm going to give you some incomes. You tell me whether it goes in PGBP or IFOS. Let's start with me first, guys. When I started teaching after I became a CA, and I used to work with EY, and I used to teach on the weekends. Please tell me, that time EY would pay me salary, which head would it be taxed under? Salaries. And when I would teach on the weekends, that income would be taxable under which head, guys? IFOS. Excellent. Yes, IFOS. Then guys, I quit EY and I started teaching full time, and so now when I earn my income from my teaching, guys, now where does it go? Now it goes in PGBP. So now you know the difference, guys, how it is. So I'm going to give you one income. In the exam also, they are never going to say give me a list of 56.2 incomes. No, they will only give you different incomes. You should know where to take them. First, if you are earning any interest from securities, example interest on debentures, etc., where will that go for a student like you? IFOS. But where will it go for a Rakesh Junjunwala? That will go in PGBP. Yes, so it can go in both. Yes, it can go in any depending on who you are. Next, you are renting some things which is not your business. Let's say you have some extra computers you are renting, some extra furniture which you are renting. Where will that go, guys? IFOS, because it's income, so it has to be taxed. But what if renting of your furniture becomes a business? Then where will it go? PGBP. Next, dividend. Guys, where will dividend go always? Always and always IFOS. What if you're Rakesh Junjunwala? Then also IFOS. What if you're a company? Then also IFOS, guys. There is no absolute clarity. This is always an IFOS. Next, guys, the government really liked your house, your bungalow, and they wanted to build a bridge over your bungalow. So they bought it. They sat across. They paid you adequate consideration. You wanted, let's say, 1 crore rupees. They paid you 1 crore rupees. But sometimes it happens that they are not okay to pay you 1 crore. Let's say for that bungalow, you wanted 1 crore, but they said, no, we'll only pay you 80 lakh rupees. So can you fight in the court for the remaining 20 lakhs? Yes, you can. And when you win that 20 lakh rupees, will the government pay you the 20 lakhs plus they'll also pay you interest? Yes, I'm talking about that interest, guys. Interest on compensation or enhanced compensation. First think and just tell me one thing, guys. This is interest and income of yours which the government wants to tax. Yes. Now, guys, is this your business income? No, it's my small interest income. So where will it go? It will go under IFOS. So this is interest on debentures. This is interest on compensation or enhanced compensation. Next, guys, what if you win a lottery? What if you win KBC? What if you win horse betting, etc.? All these are winnings. And where will it go, guys? It will go into IFOS. What if it's your business, guys? Every morning you do all you do is wake up and go and bet on horses, still guys it will be always IFOS. So horses also always run in one direction only guys, IFOS. Next, again rental. Keep guessing guys, you don't have to buy hard these, you have to just keep guessing, is that an income? Yes. And can I tax it under IFOS? Guys, you have a house and some furniture and you're given both on rent. House also along with furniture you're given on rent, and for the furniture you're getting 10,000 per month. Where will the furniture be taxed? IFOS. So renting, which is composite. And where will the house be taxed? IFHP. But what if you can't differentiate between the rent? Then the entire thing will be under IFOS. Perfect. Next. Guys, this securities and this welfare we will discuss later ahead in this chapter. One in this chapter, one ahead in PGBP. So we'll let it be. Guys, where are gifts taxed? Please tell me. When you receive a gift, MISB, SATJO, where is that taxed? So gifts we've already discussed. 10 gifts, they are always taxed under IFOS. Next. Guys, someone wanted to buy a house and they give you 10 lakh rupee as a token advance, that listen, I'll pay the balance within 6 months, and they could not pay the balance within 6 months, and you guys enter into an agreement saying that if you don't pay within 6 months, then I will forfeit or cancel your advance. So now guys, are you going to enjoy with the 10 lakh rupees? Is that your income? Yes, because it's forfeited. Will the government also want to enjoy with that income? Will they want to tax it? Yes guys, that forfeited amount will be taxed, but under which head guys? IFOS. This happened only after 1st of April 2014. So what used to happen before that, we will see in a chapter called capital gain. Next guys, there is an insurance. Guys, yesterday we forgot the insurance exemption, but we'll discuss it today. Guys, there is an insurance called Keyman insurance. This is an insurance, yes, it's called Keyman insurance. What is so key about it, or what is so different about it? Guys, Keyman insurance is not taken for your family members. No, it is taken by a company, by a partnership firm for their main person. Like Reliance will take it for Mukesh Ambani, or let's say Mahindras will take it for Anand Mahindra. It's taken for key employees. And guys, what if something happens to those employees? Then will the company get the money? Yes. Is it taxable? Yes. The company will be taxed under PGBP. What if the employee leaves guys? Will then the company find that policy any use? No. So they will tell the employee, listen, you are leaving, why don't you take this policy with you? Whatever premiums I have already paid, you pay it to me and you take this policy with you. So he'll take it with him, and if he gets the money, it will be taxable under salaries. And guys, what if both of y'all don't get it? What if he is no more and his family gets the money? Then it will be taxable under IFOS. So please repeat guys, and please tell me, is Keyman insurance always taxable? If in the exam you find Keyman insurance, will you always tax it? Yes. If the company or a businessman gets it, where will it be taxed? PGBP. If the employee gets it, where will it be taxed? Salary. And if the family gets it of the employee, where will it be taxed? IFOS. And last guys, today on a Sunday evening guys, you go to your favorite pizza place, Domino's Pizza. You order your favorite pizza guys, and while you're eating it, don't imagine this, but while you're eating it, let's say with all the cheese, there's some insect in it. Don't imagine it guys. So in that case guys, will you go and file a case against Domino's? And can they pay you money? Yes. So in that case guys, that money, will it be your income? Yes. But is it your habit guys to have insects in your pizza? No. It's your business? No. So where will that be taxed? Guys, any contract which is non-business, and from that contract, any breaking of that contract, terminating, modifying. So this was a contract. They offered to give you a pizza, but that was a bad pizza. So hence that money will be taxed under IFOS. So these are all different amounts guys. Please tell me, do you have to by heart them? Not at all. You only have to understand that they will be taxed under IFOS. Any non-business contract, any Cayman insurance received by the family members, any forfeited amount after 1/4/2014 on or after, any composite rent, any gifts, any interest on compensation, enhanced compensation, winnings, dividend, rental income from idle capacity, and interest on debentures other than business purposes, all these will be taxed. Yes. Under which head? IFOS. Alright, so these are all incomes, guys. Traditionally, I would make people by heart this, but because it's a fast track course, I don't want you to by heart it. Honestly, this works very easily. If any of these incomes come, guys, which room will you open? You will open the IFOS room, and will you tax it there? Yes, you will get it taxed there. Alright, just 1 second. Perfect, guys, these are incomes. So this is section 56. Please tell me, is the government going to be very happy with 56? Yes, there are incomes which you are going to offer in section 56. But as you know, give and take relationship, guys, will the government give you some deductions also? Yes, they will give you some deductions also. That is the rule of law. If you give, you take. So if you give income, you can take deductions. What are these deductions? Let's check section 57. Guys, there's a shortcut. This is will, repair, pick in general. But do we have the time to by heart it? No. In the exam, will they give you section 57 list all the deductions? No. So I'm giving you, I'm asking you guys, and you tell me, will the deduction be allowed or not? First, guys, this first again we'll be discussing in PGBP, so I'm letting that be next. Guys, when you give that laptop or that extra furniture or that extra laptop on rent, guys, was that income in section 56? Yes. So in relation to those laptops and that furniture, any repairs, insurance, depreciation, can I take it under section 57? Yes. If the income you're offering, you can get the deduction. So this is repairs, etc. So guys, this is repairs, insurance, depreciation, etc. Next, guys, I'm going to jump ships here. This is interest on enhanced compensation. Guys, on that extra fight that you had in the court, did the government give you extra money, and did they also pay you interest? Was that interest offered under section 56? So will they give you a deduction under 57? But how much deduction will they give you, guys? They will give you a flat 50% deduction. This we will talk about in more detail, but please remember, let's say you got interest of 1 lakh rupees. They will give you a flat 50% deduction. So they will only tax the balance 50,000. I repeat, you wanted to sell your house for 1 crore. The government offered only 80 lakhs. You went to the court for 20 lakhs. After 5 years, you got that 20 lakhs plus interest. The interest I'm talking about will be taxable here, and you will get a 50% deduction. This is PI, I is for interest. Next, guys, in relation to any of these 56 incomes, can you have general expenses? Yes, in relation to that income, can you have any general expenses? Will you get a deduction for the general expenses? Yes. So this is general expenses. Example, guys, when I would teach on the weekends and I would take my income in IFOS, can I have some traveling expenses to the class and back? Yes. Can I take it under general expenses? Yes. All right. Everyone, guys, I hold some debentures. Where does my interest on debentures go, guys? Guys, I have to ask you questions. Please reply. I hold some debentures. You are a student, you hold some debentures or some securities. Does that interest from debentures, is that income? Yes. Where will it go, guys? It will be taxed under IFOS. Yes. But to buy those debentures, guys, or to earn that dividend income, can you take a loan also sometimes? Yes. I'll explain this slightly deeper on the next page, guys. Guys, let's say these are shares of a company, and from the shares you got dividend. Please tell me, where will this dividend income be taxable? this dividend income will be taxable under IFOS. But can I buy these shares using loan money, guys? Yes, I can take a loan and I can buy these shares. So on the loan, guys, what will I be paying? I'll be paying interest on this loan. So can I say this interest is in relation to my dividend income? So if the income is taxable under IFOS, will I get a deduction of this interest? Yes, I will get a deduction, but guys, maximum 20% of the dividend income. So if the dividend income is 1 lakh, can I take a deduction of 25,000? No, you cannot take. Maximum 20,000 you can take. And guys, that is the next I. This I says interest on loan, which is used to buy shares, which is used to earn dividend income. So this is a long connection, but I hope you understand this is interest on loan connected to dividend. All right. Next. Guys, when you book a ticket on Book My Show, or when you book a flight, guys, do you pay some commission or some charges? Yes. So if Book My Show can take some charges, if GoIBook can take some charges, then guys, when you buy debentures, etc., can the banker, etc., also charge you some commission and charges? Yes. So the government says no problem, the interest on debentures we tax. So hence the commission and charges, we will give you a deduction. Commission and charges, brokerage, yes, that we will give you a deduction. So will repair pick in general, do you have to by heart it? No. Please tell me yes or no. Can I minus general expenses in relation to income? Yes. Can I minus interest on a loan which is connected to dividend? Yes, but maximum how much, guys? 20% here. Can I minus charges and commission and brokerage here? Yes. Can I minus 50% from the interest on enhanced compensation? Yes. And can I minus repairs, depreciation, insurance? Yes. Guys, this P is for pension. So I want to discuss a little about pension first. Guys, pension is received when you retire from a job, you get pension. And this pension, lots of people do not know about it, but it is taxable under salary. So once you retire, you get pension, and pension is also taxable. Yes, it is taxed under which head? It is taxed under salaries. But what if, guys, you are no more? Will your family get some part of the pension? Yes, your family also continues to get some part of the pension, but they can't be taxed under salary because it is not their job, so they will be taxed under IFOS. So will this income be taxed under IFOS? Yes. So in relation to this family pension, the government says we will give you a deduction of 1/3 of the pension amount every month, 1/3 of the pension, or 15,000, whichever is lower. Why lower? Because it's a deduction. They don't want to give a high deduction, so whichever is lower. So let's say you get a pension of 42,000. So 42,000 divided by 3 is 14,000, or 15,000, which is lower. So which is lower, guys? 14,000 will be lower. So 1/3 of the amount, or 15,000, whichever is the lower, is a family pension. So this is pension, but which kind of pension? Family pension. Alright guys, just repeating this please on the screen, everyone. Yes, here we go. Guys, any repairs, etc., in relation to IFOS income. Any family pension, can I get a deduction? Remember, 1/3 of 15,000, whichever is less. Interest on compensation or enhanced compensation, yes, 50%. Charges and commission, etc., yes. Interest linked to dividend, yes. And last, any general expenses, yes. This W I will talk about very soon. So will repair pick in general. All right, perfect. Yes, Chirag, perfect. 20%. This is a limit of 20% here. All right. So while there are some expenses which are allowed, the next one, guys, section 56 done, section 57 done. The next is section 58. The government says, listen, these will not be allowed. The government gets very angry in these and they say these will not be allowed. So the shortcut is poor wins cash income. Guys, this you need to by heart, so I'm writing the entire thing. Poor wins cash income. Everyone watch out. The spelling of poor is slightly different. Poor wins cash income. Guys, are these expenses? Yes. Are you making a payment for them? Yes. But the government says, listen, we will not allow this. They are angry for some reason and they will not allow this. First one, personal expenses. Guys, personal expenses, how can you get a deduction? So they say if you have any personal expenses, let's say today is Sunday evening, and if you take your family out for dinner and you pay the bill, will you take a deduction under IFOS? Sorry, not allowed. Next, winnings from lottery, betting, gambling. Guys, let's say you won 1 crore rupees in a lottery or 1 crore rupees in KBC. Have you gotten lucky? Yes. The government says even I want to get lucky on that same amount of 1 crore. I don't want to give you any deduction. So from winnings, you get no deduction. Next, if you are going to make cash payments, the government doesn't like, guys, more than 10,000 per person per day. The government doesn't like cash payments. So if you are going to make 10,000 more than that payments in cash, example, let's say I had to repair some extra ACs, furniture, etc., and I paid 12,000 rupees in cash, that will not be allowed. Excess, no, entire thing will not be allowed. The government is very strict nowadays with cash payments. So cash payment up to 10,000, no problem. 9,000, no problem. 10,001 rupees also is a problem. Next, you paid income tax. Guys, of course, income tax is a good thing, right? You're helping the government, you paid income tax, but the government says you are paying income tax not to run the business, but it's an after effect of business. So hence income tax, we will not give you a deduction. What about other taxes? Municipal tax, take it. Road tax, other taxes with related to business, take everything. GST, take it. Yeah, of course, if you don't take credit, you can take GST also deduction. You can take all taxes deduction except income tax, because they say income tax is not for the purpose of the activity, it's an after effect. Next, guys, if you pay some excessive or unreasonable amount to relatives, example, this is you and you are paying 1 lakh rupees to your spouse, and you are saying that I am paying this 1 lakh rupees as repairs of laptop. The government says no problem, I'll give you this deduction, but your spouse is a jewelry designer, she has no idea of how to repair laptops. Then is it unreasonable? Yes. So the government says this we will not allow because this is unreasonable, especially to a spouse or to a relative. What if this was not a spouse? What if this was random third party, guys? What if this was a random third party? Then the government has no problem, they'll give you a deduction because the third party they will tax. And you can't manipulate it with third party, but you can manipulate it related parties, and hence they say if you pay any unreasonable amounts or excessive amount, excessive basically means you had to pay 80,000 but you paid 1 lakh, then in that case 20,000 will be disallowed. So what is R? R is related parties. If you are paying excessive to related persons, it will be disallowed. Now who are related persons? Who are relatives? 232? No, guys. That is only for gift taxation. So who are relatives here? It's a clock. What do you mean by clock? This is you. Move in the clockwise direction, guys. This is you. So what is the clock direction? Your spouse, your children, your siblings, and your parents. So these are related persons. Yes, so that's why I call it the clock. Spouse, children, brother and sister, and parents. Only these people will be considered related persons. So this is poor wins cash income. All right, moving here, guys. Poor wins cash income. So all these three, guys, OOR, they all are the same concept. If you understand one, you'll understand all of them. So let's recap till here. What are the disallowances, guys? In all these cases, are you paying money? Yes. But will it be allowed as a deduction? No. Income tax? No. Cash more than 10,000 per person per day? No. Winnings, no deduction. Excessive unreasonable payment to relatives, no deduction. You know the relative definition is not 232, it's a clock. And personal expenses, no deduction. So what is this OOR? Guys, if you don't listen to the government will not listen to you. So you made a payment outside India. You made a payment outside India. Just 1 second. Thank you. So you made a payment outside India, and that payment, the government said, listen, that payment, please deduct TDS. Don't forget to deduct TDS. You said, okay, thumbs up, but you actually forgot. So the government says, listen, this is not right. I told you to do something, you did not do. Now you paid 1 lakh rupees. I will not give you a deduction. So this is basically when you don't deduct TDS, no TDS deduction, or no TDS deduction but no payment, then in that cases you will be disallowed. Same thing here also, you are paying outside India, but here let's say you're paying salary. In that case also you were supposed to deduct TDS, but you did not deduct. And in this case you were paying to a resident. These are all outside India or to a non-resident, outside India or to a non-resident salary, and this you are paying to a resident in India. Again the government says please deduct TDS, you did not. So in all these 3 cases the government gets angry. They say, how am I going to chase those foreigners? You should have deducted TDS. If you don't deduct TDS, the government gets angry. They say, we will disallow. But for a resident, they will only disallow 30%. That means if you pay 1 lakh, they will allow you 70,000, but they will disallow 30,000, 30%. Why only 30%? Because he's a resident. He's here only in the next lane. You can always go and tax him. The government can always go and tax him. So guys, here TDS has not been deducted, or if it's deducted, it's not been paid. So let me give you an example, guys. This is you are making a payment to 3 people. 1 you are paying to a resident, 1 you are paying outside India, and 1 again you are paying outside India to salary. Guys, in all 3 cases you are paid 1 lakh rupees. In all 3 cases you have not deducted TDS. So guys, will it be disallowed? Yes, disallowed, and 30% disallowed. Why did the government do this? Because the government was expecting tax. They wanted that TDS. The government is very, very smart. They want that tax, and you're not giving them the tax. So the government is very upset. So can you do one thing? Can these 3 people, can they file their return in India? They have incomes in India. So can they file their return in India? Can they pay the entire tax? And can the government then allow you the deduction? Yes, because the government only wants tax, guys. So if this first person, if this second person, and if this third person, or any of them, they file their return in India, they pay the tax, then the government says, I'm happy, I've got the money, then you can take the deduction. So in whichever year they file their return, in that year you can get the deduction. So will you get the entire deduction here? Yes. Will you get the entire deduction back here? And here 30% was disallowed, so you'll get that 30% back. Alright, so this is TDS, TCS, this is disallowances. Like these same disallowances are also there in PGBP. There also cash is not allowed, you must be knowing it. There also income tax is not allowed. There also if you don't deduct or don't pay TDS, then in that case also they also don't allow these deductions. They also don't allow personal expenses. So PGBP is very closely connected to IFOS, and hence I decided to do IFOS first and then we'll go to PGBP. So this is what is IFOS. Let me see if there's anything else. Yes, there are some 1-2 peculiar things, guys, which I need to explain to you in IFOS. This first one is you wanted 1 crore for your house, but the government says no, we'll not be able to pay you 1 crore, we'll pay you only 80 lakh rupees, and this was in the year 1718. You went to the court went on, and finally the court decided to pay you extra 20 lakh rupees and interest of 2 lakh rupees, and this happened in the year 21-22. So guys, does it take many years? 1, 2, 3, 4. It took 4 years for you to get the money. This is the interest. Please tell me, is the interest taxable? Just tell me, is it taxable or not? And the answer should always be what, guys? Answer should always be yes. So interest is taxable under which head? So this interest of 2 lakhs I will tax under IFOS. Now guys, does it belong to 4 different years, the interest? Yes. So should I go to 4 different years, change my return of income? No guys, people will run away like that from India. So they say this interest will be taxable in the year of receipt. Excellent, Bhagyashree, good. It will be taxable in the year of receipt. So whenever you receive it, you will be taxed. So this was received in the year 21-22. So in that year it will be taxable. And because we are taxing you in 1 year only, and we understand it's not fair, but we're taxing you in 1 year only, we are giving you a deduction of 50% of this. Excellent, Chirag. So 50% deduction. So only 1 lakh will be taxable. So is this something that you need to keep in mind? Yes guys, this is a concept. What is the different concept here? Here, even if you follow accrual system of accounting, it will be taxed on which basis? Receipt basis. So that is one different thing. Here, have you spent money to earn this interest? We don't know, but still will you get a 50% deduction? Yes, you will get 50% deduction. So this is something different that you should know. Next, and the last thing in IFOS, and then IFOS ends. Guys, we can then look at questions from IFOS. Guys, here is a company which is a closely held company like Byju's. Not Byju's right now. Byju's many years back was a smaller company. So let's say this is Byju's, and they have decided to issue shares at a premium. Guys, their 100 rupees share, they are issuing it for 300 rupees. Guys, will investors, or had investors bought 100 rupees share for 300? Yes. So please tell me, did Byju make a gain of 200 rupees in this transaction? Yes, but actually it's not a gain. It's not a business. It's a capital receipt. So let's say 100 crore worth of shares were issued for 300 crores and Byju's made 200 crores extra, but the government could not tax it because Byju said, listen, this is capital receipt. Guys, can I tax capital receipt? No. For a company, guys, they can issue the shares. It's not taxable. You tax my business, you tax my capital gain, but this is my capital receipt. So you can't tax my 200 crores. The government, whenever you tell them no, they get very angry. So they made a new law. They said step 1. Are you issuing shares at a premium? What does that mean? What is your issue price? 300. What is your what is your face value? 100. So is it issued at a premium? Yes, it is issued at a premium. Next, only then you go to step 2. So step 2, we will tax you. So what is the taxable amount? How much is your issue price? 300. What is your fair market value? Let's say the fair market value was 150. Then, or let's take a different number. Let's say 210 is the fair market value. Then on that difference, rupees 90 we will tax you. But what if this was never at a premium? What if the face value was like 316 or 60 rupees? Then you don't even go to step 2. You will go to step 2 only if it's at a premium. So the first step is you have to check premium. Guys, this was an exam question. Guys, first step is you check premium. Only if it is a premium, you go to the second step, which is taxable amount. So you'll need 3 things here. Yes, 1, you'll need issue price. 1, you'll need fair value. And 3rd, you'll need fair market value. Are they different? Yes, guys, fair value and fair market value are different. Sorry, not fair value, face value. Example, today, Tata Steel or Reliance Industries, the face value is only 10 rupees, but the market value or the fair market value is much higher. So you need 3 things, and from these 3 things, this 90 rupees the government wants to tax. In whose hands? In Byju's hands. Whoever is issuing the shares in that, but this is only available or applicable for closely held companies. So quickly recapping, guys, in the exam, if you hear the word dividend, where will you go, guys? Which room will you open? You'll open the room IFOS. If you hear the word assets given to shareholders, bonds, etc., deemed dividend, again IFOS. If you hear the words gift or inadequate consideration or less than adequate consideration, all of that, again, which room will you open? IFOS. And if you hear some other incomes which are like dividend or rental extra, etc. income, or contract, forfeiture, etc., which room will you open? Again, you will open IFOS. And rule of law, guys, can you have incomes? Yes. Can you have deductions also? Yes. And the government can get angry, so can they disallow you also? Yes, section 58. There's a small section 59 which I will explain it to you, only one line explanation, guys. If I have to pay someone money, let's say I have to pay someone 20,000 rupees, and that person says, listen, don't pay me now. I already passed the journal entry. That is expense to creditor. I have already passed the journal entry. I have already debited the amount. Now he's saying don't pay me, or he's no more. Then, guys, is that a benefit to me? Yes. It is almost like saving money. So in that case, they say this is called deemed income. It's actually not my money. No one is paying me 20,000. It's not my money. But because I don't have to pay and I'm saving it, it's called deemed income. So I'll have to reverse that 20,000. Yes, I have to reverse that 20,000. Very simple concept, guys. So this is IFOS. I'm going to open up now to the book, the material, ICI material. Here we go. This is IFOS. ICI material questions, then question bank. We'll do all of that. Guys, this is income from other sources. Income chargeable under section 56. Dividend income is the first thing. It's very common in the exam. Yes, let's tackle this. Rahul is a resident Indian holding 28% of equity shares in a company, took a loan of 5 lakh rupees from the same company. Guys, is Rahul a beneficial interest holder, guys? Please tell me. Yes. And he's a beneficial interest holder in a company. Beneficial interest holder basically means 10%, he is 28%. On the date of granting the loan, the company had accumulated profit of 4 lakhs. So the company has accumulated profit of 4 lakh and it's given a loan to Rahul of 5 lakh rupees. The company is engaged in some manufacturing activity. By the way, guys, I forgot to tell you that 222E, that deemed dividend section, does not apply to lending and banking companies. But this company is a manufacturing company. Is the amount of loan taxable as deemed dividend? Please tell me, guys, is this an indirect way of giving the shareholder money? Yes. So under which section? 222E. Is this deemed dividend? Yes, but only up to 4 lakh rupees, only up to accumulated profit, which is not capitalized. What if the company is a company in which the public are substantially interested? Then it is not, because this 222E is only applicable to which kind of companies, guys? Closely held companies. Next, what would be your answer if the lending company? Guys, what if this company is a lending company? Then again, lending company does not apply. Alright, so large companies does not apply, lending companies does not apply, only applies to closely held company. Guys, in IFOS is the first question they are giving you. That's how module works, guys. Module works in a very irrational manner. They give you a question at the start which you're supposed to know probably at the end. Alright, anyways, going ahead, this is the next one. Guys, there's a company called A Private Limited. Is a closely held company? Yes. They've issued 10,000 shares. Face value is 100. Issue price is 130. Is that a premium, guys? Please tell me, is that a premium? Yes. So step 1 done. And what is the excess over fair market value? 10 rupees. So 10 rupees into 10,000, 1 lakh. Will it be taxable? Yes, in the hands of the closely held company. Next, 20,000 shares. What is the face value? 100. Issued at 110. Is this issued at a premium, guys? Yes. But is it more than the fair market value? No. So will there be any taxability? No, guys. No tax. No sum shall be chargeable to tax. 30,000 shares, 100 rupees shares issued for 98. Is that issued at a premium? No, because they're not premium, guys, and hence no tax. And last, D Limited, guys. Here, 100 rupees share issued for 110. Is it premium? Yes, it's a premium. How much over the fair market value? 20. So 20 into 40,000, that is 8 lakh rupees, will be taxable in the hands of the company. As this is something that is very interesting. There was an exam question on this. Moving ahead, Guys, this one, I promise you, by the time you figure what this diagram is, you will forget every gift taxation knowledge that you already have. So guys, this is so complicated, inadequate consideration. When I decided to do gift taxation, this seemed so complicated, and hence I have that step 1, step 2, step 3 process for you all. Let's try and see, guys, this. Mr. A is a dealer in shares. He received the following. So this, guys, I am diagrammatically drawing this. 1 minute, be with me. This is A, and he is receiving some things during the year from his friend Mr. B. Please remember, it's a friend, it's not a relative. Compute the income of Mr. A chargeable under IFOS and capital gain. I am not doing capital gain. For B, approved capital gain, I am looking at IFOS. I am looking at A, IFOS for A. Everyone, you all will tell me the answers. Cash gift of 75,000 on his anniversary. Guys, will it be taxable? First step, MISB SATJA, yes. Is it received on marriage, etc.? No. And is it more than 50,000? Yes. So how much will be taxed? Entire 75,000. Next, although you should see aggregate, guys, but if one only is more than 50,000, so aggregate definitely is more than 50,000. Bullion, fair market value was 60,000 on his birthday. Guys, this will be taxable, yes, because MISB SATJA on birthday and more than 50,000, so this is taxable. A plot of land at Faridabad, the stamp duty value of which is 5 lakh on that day. Mr. B has purchased it. What Mr. B has done, it doesn't matter to us right now. As A has got a 5 lakh rupee plot free of cost. Is it MISB SATJA? Yes. Is it marriage, death, etc.? No. And is it more than 50,000? Yes, guys. Here you don't have to see 10% of sale consideration. That is only when it's inadequate consideration. This is free gift. So this will be taxable. Yes, 5 lakhs will also be taxable. Who will be paying the tax on this? A will be paying. Always the recipient pays. Under which head? Under IFOS. Next, watch very carefully, guys. Mr. A, who's a share dealer, guys, he's a dealer in shares. He purchased from his friend Mr. C, who's also a dealer in shares. So there is a C who's also a dealer in shares. He purchased 1,000 shares at 400 each. The fair market value of the shares was 600. Please tell me, guys, is a 600 share being made available to you in 400 rupees? Are you paying inadequate? Is that a benefit? Yes, but guys, this benefit is in terms of shares, which is your stock. So will it be taxable under IFOS? No. Why? Because whenever you sell these shares, the profit will be taxable under PGBP, guys, because you're a share dealer. Next. Further, on 1st of November 2021, Mr. A took possession of a property, office building. Guys, office building. So will that 20% rule apply? Nandish, that 20% rule only applies for residential property. So this, I'm very sure, this is the 10% rule will apply. Booked by him 2 years back. So guys, when was it booked? 2 years back. What is the sale consideration? The sale consideration is 20 lakh. The stamp duty value of the property as on 1st November 2021 was 32 lakh. So guys, stamp duty value today is 32 lakhs. And on the date of booking was 23 lakhs. So do we have two stamp duty values, guys? Which one ideally would you want to take? I would want to take the lower one. But for that, do I have to prove that some amount of money has been paid other than cash, other than cross check, other than crossed DD, other than bearer check, other than bearer DD? Let's see. He had paid 1 lakh by account pay check. Please tell me, guys, all the smart people here, is account pay check okay? Yes, it is okay. So can I take 23 lakh? Yes, I can take 23 lakh. So 23 lakh stamp duty value, you paid only 20 lakhs. So please tell me, what is the benefit? The benefit is 3 lakhs. Guys, step 1 done. Step 2 done. Step 3. The benefit should be higher of either 50,000 or please tell me what percentage will I use here, 10% or 20%? 10% of what, guys? Of sale consideration. People, don't go wrong. Don't go 10% of a stamp duty value. It is always stamp duty value you cannot touch. So only 10% of sale consideration, that is 2 lakhs, whichever is higher. So which is higher, guys? 2 lakhs is higher. And what is your benefit? 3 lakh. So will you be taxed on the entire 3 lakh? Yes, you will be taxed on the entire 3 lakhs. What are some, guys? On 1st March, he sold the plot at Faridabad. When he sold the plot, you will have basically a capital gain. So I'm not seeing that. So this is basically IFOS. Check guys, 75, 60, 5 lakh, and there should be another 3 lakh as well. Yes. So 9 lakh 35 is under IFOS. I hope this is understood guys. Quickly looking at the next illustration also. Discuss the taxability under gift taxation. Akhil HUF received 75,000 in cash from niece of Akhil. Akhil is a karta of an HUF. Guys, this sounds very confusing, but please tell me, is this a gift? Yes. So follow the gift steps guys. Step 1, is it MISB SAT job? Yes. Step 2, is it coming from a relative? Guys, who's the recipient? Akhil HUF. For a HUF, guys, relative means all its members. They are receiving it from the niece of Akhil, that is Akhil's sister's daughter, guys. Is she a part of Akhil's HUF? No. I repeat, guys. Who is the recipient? HUF is the recipient. But if you are receiving, are you receiving from a relative, guys? I have not discussed this. For an HUF, who are its relatives? All the members. So is Akhil a member? Yes. Is Akhil's sister a member? No, guys. Is Akhil's sister's daughter a member? No. So it's not coming from a relative. So will it be taxable? Yes, 75,000 will be taxable. Next. Nitisha, a member of her father's HUF, transferred a house property to the HUF without consideration. So again, who is the recipient? HUF. But this time, guys, is it coming from a relative of the HUF? Yes. So this will not be taxed. And last, guys, Akshat received 100 shares of A Limited from his friend as a gift on occasion of 25th marriage anniversary. The fair market value of 100 per share. He also received jewelry with 45,000. Very nice, guys. First, step 1. Shares. Guys, is it MISB SAT job? Yes. Step 2. Is it one of those occasions? Guys, if you miss the steps, you will not get right in the exam. Is it one of those occasions? No. So step number 3. Is it money? No. Is it movable property? Yes. How much is the movable property? 100 shares into 100 rupees, 10,000. Is this taxable till now? No, because it's not more than 50,000. But guys, wait, there's some jewelry also. And you have to see aggregate. Is jewelry also MISB SAT job? Is it coming from a relative? No, guys, nephew is not a relative. Only your children are your relatives. Sisters' children, brothers' children, no. Only your children. So step number 3, what is the jewelry for? 45. What is the aggregate amount? 55. So will it be taxed now? Yes. If you forget aggregate, you will get this wrong, guys. So money aggregate, movable property aggregate, only immovable property is individual. Here we go. Guys, Hari is a property dealer and he sold a building. Guys, sellers, we are not concerned. If you are a seller, we are not bothered about you. So Hari, sorry, we are not bothered about you. To his friend Rajesh, so Rajesh is the one who got this building. Rajesh, maybe we are bothered about you. Rajesh is a dealer in automobile spare parts. So property is not his stock. He got a property for 90 lakhs. So what is the sale consideration, guys? Sale consideration is 90 lakhs. On the 1st of Jan 2022, when the stamp duty value, guys, was 150 lakhs. The agreement, however, was entered into a few months back when the stamp duty value was 140 lakhs. Guys, which stamp duty value would you want to take? You would want to take the lower stamp duty value of 140 lakh. But can I take? Let's see. Mr. Hari had received a down payment of 15 lakhs by a cross check. Sorry, cross check is not allowed. So this stamp duty value you cannot take. So what is the default stamp duty value? 150 lakhs. How much did you pay? 90 lakh. So what is your benefit? Your benefit was 60 lakhs. Let's check, guys. Is it step 1 MISB SAT job? Yes. Is it step 2? No. So step 3, 1, 2 and 3, immovable property, guys. Will you use 20% here or will you use 10%? Guys, here they have not said it's the first house, etc. They have not said it's the first house. So I am not going to assume it's the first house, guys. and it sold a building. Again, we don't know it's residential building or not, so we'll use 10% only. So what is the benefit of 50,000 or 10% of sale consideration? So what is that, guys? 10% of sale consideration is 90 lakh. So 50,000 or 99 lakhs, whichever is higher. So 9 lakh, but your benefit is 60 lakhs, guys. So will you be taxed on 60 lakh? Yes, you will be taxed on 60 lakhs. Mr. Hari had purchased the building for 70 lakhs. So Hari we are not discussing anyway. So this is IFOS 60 lakhs. So here we go. 60 lakhs taxable in the hands of Mr. Rajesh. Guys, what if Rajesh was a property dealer? Guys, what if Rajesh was a property dealer? Then it would be stock, and then he would be taxed under PGBP. Alright. Guys, moving ahead to more questions. Here we go. Interest on enhanced compensation. Guys, is interest on enhanced compensation taxable? Yes. It was received by Mr. G during the year 21-22, 5 lakh. So it is always taxable in the year of receipt. But guys, do we get a 50% discount on this or deduction on this? Yes. So how much will be taxable? 2 lakh 50. But guys, they've said that 1 lakh 50 relates to this year, 1 lakh 65. Does it matter, guys? Doesn't matter, because the entire amount is taxable in the year of receipt. Let's go, guys. Please read and please tell me under which head will it be taxable. Rental income in respect of property which is held as stock in trade for 3 years. Guys, yesterday we saw house property. If you hold it for stock for 2 years, the government is okay. After that, will they be taxing you? Yes. Under which head? House property. Dividend on shares, guys. IFOS. Salary received by partner, we have not seen this, so I'm going to cancel this. Although it is PGBP, but we will cancel this. Rental income of machinery. Can it be IFOS? Yes, but what if it's your business? Then it can be PGBP also. Winnings from lotteries, always IFOS. Salaries payable to member of parliament. We have not discussed this because we haven't done salaries chapter. But guys, member of parliaments, when they get salary, they don't like to be called employees, and hence they don't want to be taxed under salaries head. They also get taxed under IFOS. Receipts without consideration, that means gifts, guys. IFOS. Interest on this is something that we have not discussed, so we'll not discuss this right now. This is salaries. Rental income, he is in the business of letting out properties. If you're in the business, then it's PGBP. Guys, the moment you see business, you know where to take it, PGBP. A sum of 1 lakh 20 was received as a gift from non-relatives. Guys, is this taxable on the occasion of marriage of his son Praveen? Raj got it. Son is getting married. This is typical Indian family, guys. Son is getting married, but the parent gets the gift. So will it be taxable? Yes, 1 lakh 20 taxable. But guys, what if this was 12,000? Then not taxable. It has to be more than 50,000. Interest on enhanced compensation 96,000. Will it be taxable? Yes, but you remember 50% discount. Next. Guys, I'm not even reading this. Again, interest on enhanced compensation, is it taxable? Yes. Even though they've given you different years, it is always taxable in the year of receipt. He incurred 50,000 by way of legal expenses. Can I minus that? No. I'm giving you 50% discount. What else do you want? Guys, if you see a board 50% off outside your favorite store, will you get 50% discount? Yes. But can you ask for more discount then? No, you can't ask for more discount. Yes, flat 50% discount. Perfect, guys. Over to you all. Please read and please tell me taxable or not. Compute the income from IFOS. Alright, Mrs. Himali is waiting, guys, for your answer. Take it over. You get 2 minutes to do this. Alright, cash gift of 51,000 on the occasion of some Purti Puja, a wedding function celebrated on husband's completing 60 years of age. So guys, will this be taxable? Yes, this will be taxable. On the above occasion, a diamond necklace from sister living in Dubai. If it's a relative, then you don't have to see how much amount also. This one will not be taxable. Sister is a relative. Celebrated her daughter's wedding. Her friend assigned, guys, her daughter's wedding and you got the gift. So 52,000, will it be taxable? Yes. So basically 1,03,000. 51,000 is taxable. All right. 1,03,000. Perfect. Guys, question number 5 is self-study. You can do it. Guys, its only thing is here a company is getting it. Doesn't matter, guys, whoever is getting the gift, as long as the gift is by a recipient, you should be taxing it. So I'm just telling you what is happening. Mr. B transferred some shares. So there is a giver who has given some shares to a company. Guys, will gift taxation apply? Yes, gift taxation is for every recipient, whether an individual or a company. Oh, that's about it. That's a nice thing, guys. We are done with it. I'm just going to upload the question bank. Here we go, guys. Question bank is here on the screen. MLX Investments Private Limited was incorporated a couple of years back, having a paid up capital of 10 lakhs. In order to increase its capital, the company further issues 1 lakh shares having face value of 100 each during the year at par. So they have issued the shares at par on 1/8/2018. The FMV of such shares was 85. Determine the tax implications of the above transaction in the hands of the company, assuming it is the only transaction made during the year. Guys, first, step 1, is it a closely held company? Yes. Step 1, are the shares issued at a premium? No, 100 rupees shares are issued at par, guys. At par means the same value. So that means no premium. So will I go to step 2 to calculate taxable amount? No, guys. Will your answer change if the shares were issued for 105? Yes, answer will change because now the shares are issued at a premium. And what is the issue price? 105. What is the FMV? 85. So how much? 20 rupees into 1 lakh, that is 20 lakhs will be taxable. And what will be your answer if the shares were issued at 105 but the FMV was 120? If they are issued at 105, will it be at a premium? Yes. Because the face value is 100, they have issued at 505, so it's a premium. But how much above the fair market value, guys? Nothing, so no amount will be taxed. Please have a look, guys. Any questions, do let me know. This is an exam question for 4 marks. All right. Everyone check this next question. Miss Julie received the following amounts during the previous year 1920. Miss Julie received a loan of 5 lakh from ABC Private Limited. So there is ABC Private Limited, which is a closely held company. A closely held company engaged in textile business, and she took a loan of 5 lakhs. Guys, this is a loan of 5 lakhs. Do you remember 222E deemed dividend could apply here? Let's see. She is holding 10% of the equity share capital. So is she a beneficial interest holder? Yes. The accumulated profit of the company was 2 lakh rupees. So guys, is this taxable as deemed dividend in the hands of Miss Julie? Yes, but only up to how much, guys? Only up to 2 lakhs. Done. Let's go to the second one. Received interest on enhanced compensation 5 lakh. Different years are given. At which year it will be taxed, guys? In the year you receive it. So 5 lakhs, is it taxable? Yes. But will you get a 50% discount here, guys? Yes, 2.5 lakh will be taxable. What if you paid 1 lakh to the advocate for his efforts? Congratulations, but no deduction for that. That's it, guys. Very good job on IFOS. We are done with another head of income after IFHP. Now guys, in the time that we have about 40 minutes. I don't want to go all out. I want to have only spend half an hour with you guys, and we will dive into a chapter called clubbing of income. So we've not finished all the heads, doesn't matter guys. Clubbing of income will be easily understood by you. I'll explain it to you, and we'll see the book, the quick book, etc. on that tomorrow. So right now I'll be back in just about 2-3 minutes, and then, or take 5 minutes, no problem guys, take 5 minutes away. When we come back, we'll look at clubbing of income. I'll introduce the chapter, explain the concepts, and whatever we can do till about 8:20. Alright, thank you so much, and see you in 5.